Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate jargon to find the real story behind the numbers. And this time we are looking at IQVIA Holdings Incorporated's financial health through their latest quarterly report. It's almost like they're giving us a peek behind the curtain of their operations after the most recent quarter. And guess what? We have a lot to unpack. Before we dive deep into the numbers, if you love getting into the nitty-gritty of these financial documents and finding out what they really mean, make sure you are subscribed and hit that notification bell so you never miss an update. Also, we have a fantastic community over on our Discord server where we break down these reports even further and discuss investment strategies. So join us there, the link is in the description below. So IQVIA Holdings Incorporated has put out its quarterly report for the period ending the 30th of September 2025, giving us a look at how they performed in the third quarter and the first 9 months of the year. Let's see if their business is booming or if there are any warning signs. First up, let's talk about money coming in revenues. You know, the lifeblood of any company. For the third quarter of 2025, IQVIA brought in $4.1 billion. That is a pretty solid number and an increase of 5.2% compared to the same time last year. That growth was mostly thanks to their technology and analytics solutions and research and development solutions, segments growing well, keeping things moving forward. Now, looking at the longer term, the first 9 months of 2025 saw revenues hit $11.9 billion. That is up 4.4% from the previous year. Again, that steady climb is a good sign, showing consistent performance across their business. Of course, bringing in that revenue comes with costs for the third quarter. These costs went up by nearly 10% compared to last year. This means it costs them more to deliver their services. Specifically, the cost of their people who do the work and the data they purchase went up. For the 9 months of the year, these costs also went up by about 6.6%. While revenues are growing, these rising costs and delivering services are something to keep an eye on, as they can eat into profits if not managed carefully. Now let's look at the expenses for running the company, the things like sales, marketing, and general administration. For the third quarter, these expenses actually went down slightly by about 1.5% compared to last year. That is a positive sign. For the 9-month period, they also saw a slight decrease of about 0.8%. This suggests that while their core service delivery costs are rising, the administrative overhead is being managed well. Let us break down the profits by their main business areas. IQVIA has 3 important segments: technology and analytic solutions, which focuses on providing insights and tech solutions research, and development solutions, which handles clinical trials and contract sales, and medical solutions, which deals with healthcare providers and patient engagement. For the third quarter, their technology and analytics solutions segment saw its profit go down by 8.6%. This is a bit concerning. Their research and development solutions segment profit stayed almost flat, down just a tiny bit by 0.4%. The contract sales and medical solutions segment saw a small profit increase of 8.3%. For the 9-month period, the technology and analytics solutions segment had a profit increase of 1.6%. Which is alright, but the research and development solutions segment saw its profit drop by 4.3%. The contract sales and medical solutions segment made modest gains in profit. Overall segment profits are a mixed bag, with some areas showing strength and others showing some pressure. Now, looking at their balance sheet as of the 31st of December 2024, they had total assets of about $26.9 billion. Fast forward to the 30th of September 2025, and that number has grown to nearly $28.7 billion. That increase in assets is generally a good indicator of growth and investment. Digging a bit deeper into those assets, goodwill is a significant part of their balance sheet. Goodwill represents the excess of the purchase price of an acquired company over the fair value of its identifiable net assets. As of the 31st of December 2024, goodwill stood at $14.7 billion, and by the 30th of September 2025, it had jumped to $15.9 billion. This indicates that IQVIA has been actively acquiring other businesses, spending more than the reported value of those companies' net assets. This is a common strategy for growth in this industry, but it also means that the success of these acquisitions is really important for the company's future. The 30th of September 2025 and the 31st of December 2024, when we look at liabilities, their total liabilities grew from $20.8 billion at the end of 2024 to $22.4 billion by September 2025. This increase is largely driven by growing long-term debt and other current liabilities. Having more debt is not necessarily bad if the company is using it to grow and generate returns, but it adds to their financial risk. Let us talk about the bottom line net income for the third quarter of 2025. It was $331 million. That is a nice increase from the $285 million they reported in the same quarter last year. For the first 9 months of 2025, net income was $846 million, which is lower than the $936 million recorded in the same period of 2024. This decrease over the 9-month period, despite revenue growth, suggests that increased costs and some segment profit declines might be impacting overall profitability. Diluted earnings per share for the third quarter of 2025 came in at $1.93, which is higher than the $1.55 in the same quarter last year. However, for the first 9 months of 2025 diluted earnings per share were $4.86, down from $5.08 in the prior year. This again shows that while the current quarter looks good, the year-to-date picture has some headwinds. Now onto liquidity, IQVIA had $1.8 billion in cash and cash equivalents. As of the 30th of September 2025, that is a slight increase from the $1.7 billion at the end of 2024. Having a healthy cash position is crucial for operational flexibility and weathering economic downturns. Looking at their cash flow from operations for the first 9 months of 2025, they generated $1.9 billion. This is an increase from the $1.8 billion generated in the same period of 2024. This improvement in operating cash flow is a very strong positive sign, indicating that their core business operations are generating more cash, which is always great to see. However, their investing activities show a significant outflow of cash. The first 9 months of 2025 saw a use of $1.2 billion in investing activities. This is up from $1.1 billion in the same period last year. A big chunk of this outflow is due to acquisitions of businesses and capital expenditures like buying property equipment and software. This shows IQVIA is actively investing in its future growth through acquisitions and internal development. Financing activities also reveal substantial activity. For the first 9 months of 2025, they used $685 million in financing activities. This is an increase from $503 million in the prior year. A major driver of this outflows is the repayment of debt and principal payments on leases, along with significant share repurchases, which amounted to over $1 billion in just 9 months. They also saw proceeds from issuing new debt, which helped offset some of these outflows. They are clearly making big moves in managing their debt and returning capital to shareholders. Speaking of returning capital to shareholders, IQVIA has a robust equity repurchase program. As of the 30th of September 2025, they had remaining authorization to repurchase up to $1.98 billion of their common stock. They repurchased quite a bit of stock in the first 9 months of 2025, over $1 billion worth. This is a clear signal that management believes their stock is undervalued and they are actively trying to boost shareholder value. Now let's touch on their debt structure. As of the 30th of September 2025, IQVIA had $15 billion in total indebtedness. They have various credit facilities and notes. For instance, their revolving credit facility due 2026 showed $0 borrowed, indicating they repaid that portion. They also have substantial senior secured credit facilities and senior notes outstanding with maturities spread out over the next several years. The fact that they recently issued $2 billion in new senior notes due in 2032 shows they are actively managing their debt profile, perhaps to fund acquisitions or refinance existing debt. A significant event in the first 9 months was an amendment to their credit agreement on the 10th of March 2025. This involved establishing a new $1.985 billion loan facility, which was used partly to refinance existing loans. This is a pretty standard corporate finance move to optimize their debt structure and interest costs. Now, for something more interesting, a legal saga, IQVIA was involved in a long-standing lawsuit with Vieva Systems, Inc., dating back to 2017. The case involved allegations of intellectual property theft and anti-competitive practices. It sounds like it was a real back and forth with sanctions being imposed. The good news is that as of August 2025, the parties reached a complete resolution of all pending legal disputes. Importantly, neither party made any payment to the other in connection with this resolution, which is a great outcome for IQVIA. Looking at the earnings per S-share, which is a key metric for shareholders' diluted earnings, per S-share in the third quarter went up to $1.93 from $1.55 in the previous year. That is a solid improvement. However, for the first 9 months of the year, it decreased to $4.86 from $5.08. This highlights that while the most recent quarter was strong, the year-to-date performance tells a story of increased costs or other pressures impacting per S-share earnings growth. So what is the overall picture here? IQVIA is showing strong revenue growth and improved operating cash flow, indicating healthy core business performance. They are also actively investing in growth through acquisitions and managing their debt strategically, including significant share repurchases, which is generally a positive sign. However, the increased cost of revenues and some declines in segment profits, especially for research and development solutions, suggest some operational challenges. The lower year-to-date net income and diluted earnings per S-share compared to last year, despite revenue growth demand attention. The massive increase in goodwill through acquisitions means their future success is heavily tied to how well they integrate and leverage these new businesses. The resolution of the long-standing Viava lawsuit is a huge relief and removes a significant overhang for the company. In conclusion, IQVIA is navigating a complex market with aggressive growth strategies and active capital management. They are demonstrating resilience and a commitment to shareholder value, but the rising costs and profit pressures in certain segments need careful monitoring. Their ability to effectively integrate their numerous acquisitions and maintain profitability across all segments will be key to their sustained success. Alright, that is our deep dive into IQVIA Holdings Incorporated's latest financial report. What are your biggest takeaways from these numbers? Are you bullish or bearish on IQVIA's future? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate financial insights. Don't forget to join our Discord community. Linked in the description, we are building a great community of savvy investors. Thanks for watching, and well, see you in the next one.